VSS Mani, the MD of Just Dial, which also delivered its Q1 numbers. A stable set joins us on the show. Mr. Mani, thanks so much for joining in. You know, revenue growth is steady, mostly led by realization growth, uptick in pricing, but the paid campaign growth is muted as a result. What's the reason?
First is the realization which you see, the revenue growth, it's actually 11.7% on a likes-to-like basis. If you see the last year, same quarter, we had Omni revenue, which is a different product, which we kind of discontinued for some time. So if you see that way, it is 11.7%. And second, this quarter, our focus has been to increase prices and focus on areas which are far more monetizable. So the thing is, we're not going after acquiring as many customers, although that's going to be the case. You know, the combination of both is what takes you there. But since we did so much of price increase and all that, we wanted to focus on that, not really look at the number of customers that we.
Okay, and the traffic growth has been good this time thanks to your ad campaign. But what is the update on Search Plus and its monetization?
So the happiest news for us this quarter is the growth in our traffic, which is 32% year on year, which is phenomenal, okay? Which is such a high base that Just Dial has. If we have grown 32%, the ad plan campaign that we have been running has been successful. Second is we spent about 22 crores in this quarter on the last quarter on television, on advertising. Despite that, if you see the quarter on quarter, the profitability and the EBITDA level has been pretty good. In fact, it was 1% higher, I think. So that's a lot of efficiency there. Then if you look at from the standpoint of monetization, when the traffic grows exponentially, monetization catches up very soon. So that way, if you see, I think this has been a landmark quarter. And this has also, if you see, our app downloads have grown 250% year on year.
You know, since ad spends are going to remain elevated, where do you see EBITDA margins perhaps bottoming or stabilizing?
I really don't want to comment on that, but it looks like the margins will at least remain the same. But I don't want to really comment on margins and all that. But overall, I'll tell you how we look at the business opportunity. I think there's a huge opportunity out there for a meta search engine which gives product comparison and price comparison across the board for any product or any service. So we are shaking hands with all kinds of online players, online verticals, as well as offline players. We are agnostic about that. So we believe.
And before we let you go, we'd like to talk about the buyback, because the buyback price of 700, that too via open market, will be the key driver for your stock. But buyback size of 89 crores is too small in contrast to over 1,000 crore cash on the books. Why is that so?
The buyback rules are such that if you want to go for a board-approved buyback, it's about 10% of the net worth, where you have to exclude certain things in that. So that's the rule. And then if you want to go 15%, you can go up to 15%, which should be with the shareholders' approval. We thought like we should do a faster one, and we go for a board-approved buyback, and that's what we've chosen. So whatever is optimum possible, we have done that. And we didn't want to go the the tender route, because that would have given us 25% buyback, but we didn't want to do that anymore.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.